All right, here we go. So, hi everyone. My name is Kate Burke, and I work at Alto IRA. For those of you that joined us for session one, welcome back. And for those of you that may be joining us for the first time, we are happy to have you here. So, this is the second episode of a four-part series that we're bringing to you in collaboration with GCI Asset Fund. So, thank you again to David Smith and the rest of the team at GCI for the partnership. All right, a quick recap of what we covered last week, where the topic was, what is a self-directed IRA and why do you need one? The main takeaway here is that while there's no legal distinction between a traditional and a self-directed IRA, the main difference is that with a self-directed IRA, you need to work with a custodian that allows you to use your retirement dollars to make investments into alternative assets, things like real estate, private equity, farmland, startups, and more. And now for session two, the topic here is you don't have to be Peter Thiel to invest like Thiel with a self-directed Roth IRA. And just a quick disclaimer again, as I mentioned in our first session last week, this presentation is meant to be educational and does not constitute legal or financial advice. So for the purposes of today's session, we'll review Peter Thiel's investment process, timeline, and outcomes. And I'm also going to walk you through what it means to invest into alternatives using your self-directed IRA. So as you may or may not have heard, this summer, ProPublica and a number of other media outlets published stories and exposés on Peter Thiel's Roth IRA and how he grew it from less than $2,000 to a $5 billion account. Long story short, billionaire gets away with not paying taxes. What else is new? We hear this every day, but I think it's really important to take a deeper look exactly at what occurred, because in reality, everybody has the ability to do exactly what Peter Thiel did. They just aren't aware of it. So a mini history lesson before we get started on what Peter Thiel actually did. Why do we even have Roth IRAs to begin with? So starting in the 1970s, employee pensions were in rapid decline. So Congress was actually concerned by the number of people with no retirement savings. So what they did was they created the Independent Retirement Accounts, or IRA as we know it today, by passing the Employee Retirement Income Security Act. So this established the IRA, and initially, when it was first passed, was only available to workers without pension coverage. A few years later, in 1981, the Economic Recovery Act included expansion of IRA eligibility to all workers and spouses, regardless of whether you had a pension or not. And so the idea of the traditional IRA was very simple. You might have a 401k today, you invest up to a certain amount pre-tax each year, and any earnings from dividends, gains, and interest won't be taxed until the point of withdrawal, which is age 59 and a half and onward. However, in the 1990s, Congress realized that not a ton of people were using these IRA accounts. So in 1997, they established what's now called a Roth IRA in addition to a traditional IRA. And this was named after the late Senator William Roth of Delaware. And so the new idea behind a Roth IRA is that you pay all of your taxes upfront on any money you put in before it goes into the Roth IRA. That way, the real benefit here is that you aren't subject to any taxes upon withdrawal, regardless of how much your investment grows. So I just want to reemphasize this point here. Not only do your investments grow tax-free in a Roth IRA, regardless of how big it becomes, but your withdrawals are also tax-free. And what that means is you can sell your holdings in the IRA and not take a distribution and reinvest that money instead into further opportunities, all within the tax-free confines of your Roth IRA. So in 1999, the first step here, this is exactly what Peter Thiel did. And it's actually a really great demonstration of why it can be so advantageous to use this method of investing for riskier opportunities like those in the alternatives market. All right, so how exactly did he do it? In 1999, the yearly contribution limit was $2,000 for a Roth IRA, and the annual income limit to qualify for contribution was $110,000. So Peter Thiel started his investment with $1,700 into his Roth IRA, and he used that investment to buy his founder shares of PayPal. And at the time, he was making less than the income cap for Roth IRA investing. Fast forward a few years, PayPal had gone public, was bought by eBay, which really launched the growth of this IRA account, or the Roth IRA account, to just about $30 million. And from there, like I mentioned in my previous slide, is he actually sold those shares in his Roth IRA, or kept them in the Roth IRA, and reinvested them into a pre-IPO stake in Facebook. And because he did all of this, again, in his Roth IRA, all of these investment gains were all tax-free and available for continued reinvestment. So we're not all going to be Peter Thiel. We're not all going to become billionaires and know exactly what we're doing. But the point here is that if you think that you spot the next Facebook and you want to invest in it, you should be able to do that. And because most people have most of their assets tied up in their retirement accounts, this is the way to do it. All right, so some important questions. Why aren't more people doing this? And how can I invest into an alternative asset using my self-directed IRA? So as we discussed previously last week, and as I've mentioned before, most people just don't really know that they have the option to use their IRA like this, and it's one of Alto's goals to change that. So the recent buzz around the topic of Peter Thiel and Roth IRA investing, and just generally access to more information in today's world, has really spiked interest in this topic. But there's a lot to learn here, and Alto is here to help educate and guide you through the process. Beyond lack of awareness, the other two primary reasons are that it's too complex and expensive. This is something that we also touched upon in our last session. So it's large custodians typically don't allow investors to allocate any of their IRA to unregistered securities. Like we said last time, if you asked Fidelity or Schwab, your typical IRA custodian, to reallocate some of your IRA dollars to an alternative asset, they actually wouldn't let you do it. So while there are other options for self-directed IRA custodians, they tend to be really cost prohibitive and just a terrible experience with too much paperwork, and it can take months to complete an investment. So much so that it's really only been available to ultra wealthy and institutional investors until now. And essentially, that's why we created Alto. We created Alto to make self-directed IRA investing more accessible to everyone. So by introducing and incorporating technology to make the process faster, easier, and more equitable, we keep it so that we have the lowest fees of any other custodian in the market doing what we do. And we also partner with several investment platforms and deal sponsors such as GCI that are available to everyone regardless of their accreditation status. And some of our partners even have low investment minimums of $50. So we're really expanding access here and making this method of investing equitable and accessible for everyone. So some closing thoughts on my portion of this presentation. You do need to be careful when choosing your custodian for a self-directed IRA. There are lots of different fees to consider. There's investment access to consider, like which partners can I go through. There's also the investment process and timeline. Some other custodians in the market, it can take you weeks or months to fulfill a single investment. But with Alto, you can fund your account the same day you open it. And depending on where you're funding from and what investment you're trying to go after, you could close it within the same week. Some other things to consider, legislation. We currently have a bill going through the House right now that's being considered and being marked up and redlined right now. And some of the considerations that are made for this new infrastructure bill are actually going or proposed to be paid for with some changes to retirement capabilities, specifically with IRAs. So the bottom line here is that anyone who's watching this presentation and anyone who's interested in investing through their IRA really needs to pay attention. Contact your local representatives and try to understand what their thoughts are and how this might impact you, and just stay informed and in the know on this. And next week, we're going to get started with how to actually get started with Alto IRA and open up a self-directed account. And I will pause for any questions. Otherwise, David, it's over to you.
Yeah, sure. Thanks a lot, Kate. And if you wouldn't mind pulling up our presentation, our slide deck. So welcome again, everybody. As Kate mentioned, this is the second part in a four-part series. My name is David Smith. I am one of the managing members of Growth Centers International, or GCI. And for those of you who weren't here last week, we developed real estate and leased that real estate to small to mid-sized cannabis cultivators. You'll see some parallels between our model, our business model, as well as the data center industry's business model. And of course, that served as our inspiration. So next slide, Kate. One of the things I wanted to touch on is some of the history associated with Peter Thiel and the correlation to just the cyclical stock market. And this graph here shows a timeline of historical recessions, all shaded in pink. So again, some of the factors include stock market crashes, you got wars, world events, tech bubbles, housing bubbles, pandemics, etc. We all know this is a recurring theme throughout history, and it will continue to happen again. But from the Peter Thiel standpoint, he made a fortune by investing $1,700, all right, into PayPal to purchase shares at literally less than a penny a share. So today, after 20 plus years, you've got buyouts, you've got splits, etc. The stock is currently trading, I think, at around $72 per share. And if I'm not mistaken, he made somewhere close to, I think, 28 million just off of that transaction alone. And then he takes that and he invests it pre-IPO into some Facebook stock, and the rest is history. So the question for us is, how do we find that next PayPal in the stock market without having access to founder shares like he did, or pre-IPO shares? And the answer is through alternative investments, and that's why we're here today. So as Kate mentioned, a ton of alternative investments. There's things such as real estate. Crypto is something that's getting a lot of attention. It's great. In fact, I have some crypto personally. The thing with crypto is there tends to be a lot of volatility. So as you look at this graph, when you're able to get in and ride the wave of an ascending industry trend, such as crypto, you can really combat a lot of these recessionary pressures that you see in the pink shaded areas. However, from GCI's standpoint, as an alternative investment, maybe compared to crypto, we take a little bit more of a pragmatic approach. So somebody that's got a portfolio and trying to balance it with alternative investments, they can take the volatility and the potential gains of a crypto, and then they can also include some of the more pragmatic and fundamental assets like GCI. And if you want to hit the next slide, I'll explain what I'm talking about. What we do at Growth Centers International, again, we are a real estate development company. And our purpose is to develop high-tech, innovative real estate and lease that, again, to small to mid-sized cannabis cultivators. So if you take a look at this picture here, we will take a building like this and provide not only the high-tech amenities, the infrastructure, and security. We will lease this to about 10 to 20 small to mid-sized cultivators, ranging in size of their grow suite. So each grow suite for that cultivator will be anywhere from, let's say, 5 to 20,000 square feet on average, all under one roof. So by providing this type of infrastructure in today's cannabis rush, if you can imagine 1849 and the gold rush to California, and a bunch of people coming to mine for gold, yeah, there are people who made it rich and scored big, but there's also the people who sold picks, axes, and blue jeans to those miners that also made it very, very, very wealthy. So we are those picks and axes to this new green rush, if you will. And as you can see here, it allows a tremendous number of advantages for the cultivator, reduces their risk, enables control, and allows them to focus on their core business so they're not having to be real estate developers. Next slide, please, Kate. So yes, this just goes over some of the specific amenities. We went over this last week. I'll just give a brief recap. So the things like environmental tech, that's for the ability to grow specific strains or genomes within a particular grow suite. The security, 24/7. I mentioned some of the features. We've also got fingerprint and retinal scans. We've got power and a 30-year rate lock from our infrastructure partner, our utility company out there. Again, the redundant infrastructure, protection from outdoors, and the jurisdictional compliance. So when you have a cultivator that needs to provide certain proof of compliance for things like environmental air quality or security or zoning, we already have that packaged nicely for them, so they can just hand it into the permit department, and then that's one less thing they have to worry about. Next slide, please, Kate. Some of the benefits, we spoke of some of these things in the last slide. Again, we provide that infrastructure, and we do it in a consumption-based model. So now if cultivators are not having to lay out a huge capital expense for real estate and infrastructure, now they've got better cash flow. Their balance sheet looks a lot better. They've got more favorable terms on their money that they're borrowing, and this leads to more profitability. So our objective is to really cater to these small to mid-sized cultivators, level the playing field from an infrastructure standpoint, and ensure that they're able to compete with these large enterprises in the industry because they still have access to that infrastructure, to all those controls, to the redundancy, and all the other things that I mentioned. And when we talk of some other things that people look for with alternative investments, besides just the return, such as social equity and impact investing, now we have a vehicle and really a real estate platform that can provide measurable results in terms of social equity and impact investing. Next slide, please, Kate. Our first project is in Michigan. A lot of momentum with legalization happening throughout the country. Within Michigan, the reason we chose Michigan versus a state like California is because the power cost and the real estate are significantly lower. With Michigan, just due to the impact that closing down of the auto industry had on that area, they are starving for industries such as cannabis and really any industry development that can come to that area. Furthermore, when federal decriminalization hopefully happens, which hopefully is on the horizon, Michigan is perfectly situated as a distribution hub for the entire Midwest. And assuming that international trade happens pursuant to that, then Michigan is right across the bridge from Canada. So its location is perfect for what we're trying to do. And there's some other projects, but this is the first one. Kate, next slide. In terms of who else is doing this, you do have some REITs, you do have some property owners who are catering to the large single occupant tenant, and they're really just leasing out the whole facility, kind of on a triple net fashion, and they're just giving them the keys, and then it's on that large cultivator to outfit it with all the systems and things that are going to be required for the grow operation. GCI's model is a little bit different. Again, we provide these individual cannabis grow suites for these small to mid-size and quote unquote craft cultivators. And we're the ones who actually outfit most of the infrastructure directly into that suite. So when we start talking about the ability for a plug and play model, this is exactly what we're going after. Nobody else is doing it in the industry. And there's some reasons why we feel that we're well suited to really have a foothold on this market. Number one, we've got a tremendous amount of specific cannabis industry knowledge. So when you're talking about a service offering, we understand the elements that go into that and that are going to be marketable to our tenants. And furthermore, we've got a very strong partner ecosystem. It ensures the success of our tenant, and we create successful entrepreneurs through that partner ecosystem. And then all of a sudden, it's not just space and power in a building, it's all of a sudden a platform to leverage for access to some of our partners. And if you want to go to the next slide, Kate, we can discuss some of those Top of the list, you see Ease, which is the largest cannabis distributor in the industry. They've got a momentum program, which incubates startups and small cultivators, things like grants, training, white label opportunities. The Detroit Regional Partnership, they facilitate the entitlements for the cultivators. Again, Consumers Energy, that's our utility partner. They're providing an on-site electrical substation and also that 30-year rate structure that we discussed. From our construction and design standpoint, Con, Chrisman, and PMA, those three, they've got probably about 300 years of collective experience, and they've built every conceivable building system that you can imagine. And finally, Flint and Genesee County, when we start talking about going into an area or into a community and proposing a large site development like this, then Flint, Genesee County, they can translate our arrival and our development into things that have measurable impact to that local community. Things like jobs, job training, career development, training beyond just quote unquote blue collar jobs, entrepreneur development, that type of thing. Very, very important because that facilitates the entitlements and the approvals within that jurisdiction. And we're not necessarily getting held up or finding contention within the planning board. Next slide, please. The value, and you can just keep going. The value of GCI is multifaceted, I should say. We have a cannabis-centric business model. And when we went to that previous slide that showed the recessions, just by nature of being a cannabis-centric business model, we have some inherent recession proofing. Cannabis is an essential service. It was deemed an essential service by local jurisdictions. Dispensaries and the entire supply chain were very operational during this last pandemic. However, if you take a closer look just by our model and what we're doing, we are also participating in some of these other recession-proof sectors. So you can see under essential services, you've got real estate, there's IT, and there's energy. Furthermore, if you go to the next slide, Kate, if there was ever a decline in the cannabis sector, GCI can easily pivot to serve the indoor agriculture market. So whether it's cannabis, or whether it's saffron, or whatever, the infrastructure model still works for indoor ag because all of it's indoor ag. So as an alternative investment designed to provide some recession proofing for your investment portfolio, now we're also touching one of those previous sectors on that last slide, we're also providing consumer staples at this point, food, et cetera. And again, that's more recession proofing, and that falls in line with that fundamental pragmatic approach. Are we going to get the returns of a cryptocurrency? Maybe not, but we're also definitely not getting the volatility of that as well. Next slide, Kate. As far as the investment offering, we are raising a seed round of about $1 million. As you can see here, it's done through a private placement memorandum, and you can see Reg D or Regulation D, Rule 506C, and plenty of resources to look that up if you really want to understand everything contained herein or therein. We are seeking $978,000 essentially to entitle that first Michigan project. Upon the entitlement, which means approval through the planning board, then that's where a separate LLC, a separate funder LP, will buy out the project from GCI. They'll construct it, go vertical, manage it, and own that site development. GCI will then turn its attention to the next project and go entitle the next project. So we already have a second site in Michigan, and then we pretty much follow the map in terms of legal, recreational, and medical cannabis. Some of the markets that come to mind: Nevada, you got Oregon, you got Oklahoma, you got Illinois. You can continue going east to places like Virginia, upstate New York, New Jersey, and Massachusetts, et cetera. So we'll continue to proliferate over time. One of the things that Kate mentioned is some of these minimums. Our minimum is $10,000, and there is a full prospectus subscription agreement, an operating agreement that will give you all of the terms. It's available today. You can register to receive one through our website, and you can continue, Kate, sorry. Next slide. And that's our website, gciassets.com. You can contact us by phone, again, 833-386-3424, or send mail to invest@gciassetfund.com. That being said, that's the end of the slide. I don't know if we have any questions or not, but if we do, feel free to ask.
All right, thank you so much, David. That was awesome. I'm not seeing any questions in the queue, but yeah, as you said, you can definitely contact you guys at your contact information listed here. Anyone who registered for this webinar will also get the contact information for Alto. So looking forward to hearing from anyone that may have questions. And with that, I think we'll call it. So thank you, David.
Fantastic. Thank you, Kate.
All right, bye everyone.
All right, bye everyone.